this was massive in terms of almost an existential business risk, to these models in terms of the gig economy. It could have been 500 million incremental expenses to Uber, 150 million for Lyft. And in my opinion, they're really popping the champagne today because this was really a best case outcome. And it was a dark cloud over the gig economy in these stocks. And I think worth, potentially 15, 20% to ultimately where I see the valuations.
And you can see how the stocks are doing today. One of them up 12, the other up 9%. There's a Lyft up 9. Does this action by the California voters forestall similar moves in other states to have those companies reclassify their workers as employees, not as contractors? In other words, does the California vote mean it's less likely that Nevada would act or Arizona would act or New York would act?
I mean, you make an excellent point, and that's really the crux of the issue. The worry of the street is that this is going to be a Pandora's box situation, a ripple effect across cities and states. The fact that the voters in California, that they approved this was really a seminal moment. And I think from the beginning, really the last year and a half, it's been a head scratcher in terms of AB5 legislation, in terms of what this could have done, not just to the gig economy, but the drivers themselves. I can tell you, in the hundreds of drivers that we've talked to, 95% of them were against the AB5. So this is definitely a sigh of relief early this morning for investors as well as for the drivers themselves.
EB5 being the law, the legislative law that would have classified these workers as employees, correct?
Yeah, and that really was the Fort Sumner moment, and it all started, and ultimately Prop 22, that was the last stand, because ultimately the Uber and Lyft, potentially they could have left California. And that's why they spend so much and was such a dark cloud over the stocks.
Just not do business in California and moved elsewhere. That's very interesting. And they get a lot of their revenue from California. I think Uber particularly, Lyft particularly as a percentage of total revenue. Let me just solicit your ideas on what we're seeing today in the market and in technology in particular. I know you cover a lot of tech companies all across the map. Why do you see them doing so well today, including big cap tech?
A few dynamics. One, in terms of no blue wave, at least from what we see, that's viewed from an antitrust perspective as now more of a contained risk. If there was a blue wave, that was a bigger worry for large cap tech, especially going to this Beltway versus big tech battle 2021. And then in what potentially looks like a Biden presidency potentially, this is something that could be viewed positively in terms of the decoupling between U.S. and China, positive for semis, Apple, Cisco, and others. I'd call it almost a Goldilocks scenario in terms of what we're seeing today.
Shepard Smith here. Thanks for watching CNBC on YouTube.